Well, howdy there, folks, and welcome into today's video. Today, we're going to talk about 10 stocks that are down over 50% that I think are worth at least maybe taking a peek at, okay? We haven't done one of these videos, honestly, probably since, I don't know, maybe April or May of last year, when obviously the whole market was crashing. We had the whole Rona situation going on. Stocks were getting devastated. And so it's probably been about a year or so since I've been able to do one of these videos talking about a whole bunch of stocks that are down 50% plus. But recently, as we know in the market, anything growth stock related has been getting destroyed, right? Those stocks have been absolutely devastated. If you own any of those stocks, you probably know exactly what I'm talking about. A ton of those stocks are down 20, 30, 40%. But the ones we're talking about here today are down over 50%. Some of these stocks are down as much as 85% from their highs a lot of these stocks reached just a few months ago. So needless to say, yeah, we got some stocks to talk about in this video here today, and I'll tell you a little bit about these companies. Hopefully at least a few of these stocks you are at least interested enough to look at. Let me know if you feel like these are stocks to buy now, if you feel like these are just stocks to watch. I would love to hear your guys' opinion about any of these stocks in the comment section. Also, let me know if you're owning any of these stocks, okay? Make sure you subscribe to the channel if you're not already subscribed to this channel. This is where I'm posting all the content at the moment. One day we'll probably go back over to the main channel, but for now, this is where I'm posting all the videos. If you want to join Stock Hub, that is our free Discord chat. That'll be first pinned comment down there. If you want to join my private stock group and also the private Discord chat, check out the second pinned comment down there. Alrighty, guys, let's get into this. First stock up here of the bunch. This one's down about 60% from its all-time high. That was, well, 52-week high, all-time high. You know, the company hasn't even been public for a year now. And that's Palantir, PLTR. So this is a stock that has just been getting devastated. I mean, you know, it came out with earnings. A lot of folks like the earnings, right? Strong revenue growth. I believe the revenue growth was, I think, 49% or something like that year over year. Company's on a really nice spot as far as being at the intersection of data and artificial intelligence. And a lot of folks are really, really excited about this stock. Let's be quite honest, okay? It's not just retail investors. Folks like Cathie Wood has been buying this stock, right? I may have just started a position in this stock, and it might build this position a lot bigger if it continues to go down. But let's be quite clear, this stock is in a bad place at the moment as far as the stock price goes. It's down over 60%. And this is one of those stocks that I think it's a hard one not to at least want to research a little bit. Doesn't mean everybody, you know, should buy this stock, or it's a stock that should be in everybody's portfolio, but it's a hard stock to not at least take a little peek at and maybe go on their investor relations page, maybe surf around a little bit, listen to a conference call, maybe read a little bit of a 10K, and do a little research in this company. Maybe it's a stock you're interested in, maybe making a position in. Maybe it's a stock you're not interested in making a position in. But I think it's at least a stock that's interesting to research. It's not the easiest business model to understand when you first do a little research in it. It's not like, you know, a food business or something like that, or it's not like a restaurant or, you know, that you can understand in a matter of, you know, 30 minutes or whatever. This one's going to take some time. It takes days or weeks, but this is absolutely a very, very interesting stock. It continues to get hit. It's a stock that I'm personally interested in, and yeah, it's the stock price is in a bad place at the moment, and honestly, I don't see it fixing itself until, man, I don't know, maybe when everybody just loses faith in this one, and it's just like that devastating moment. For now, I don't know if we've quite hit that point in Palantir. There's still a lot of positivity around the stock. There's still a lot of hope around the stock. Eventually, you get to a point in some of these stocks that are being beaten down where it just is that moment where it's just hammered. People give up. They throw, you know, all the weak hands leave, all the medium hands leave, and they just, you know, people are just devastated, and they just give up on it. And they're like, that stock's not the one. It's just a bum stock. It's a crap stock. Maybe we end up reaching that level with Palantir. We haven't reached it yet. There's still a lot of positivity around this one and a lot of hope, okay? $33 billion market cap now. Remember, this is a stock that I have seen a lot of people, a lot of folks believe this is going to be, you know, a $500 billion to $1 trillion company, you know, 5-10 years from now. So I mean, yeah, if this valuation continues to get put down, that just means the risk reward is getting more and more attractive on a stock like this. So yeah, had to cover this one in this video, down 60% plus from its highs. Palantir. Next one up here, RKT, rocket companies. You should think of this company as a mortgage company, refinance company, auto loans. They have a lot of different business lines now, honestly. It's amazing. You do a little bit of research into Rocket, and they just continue to expand their business and expand their business. Extremely profitable. So this is a very, very funny stock, okay? Very, very strange stock. So it's down 60%-ish, right, from its 52-week high. $32 billion market cap-ish right now, right? And this is a very, very interesting stock. So right now the business is ultra profitable. And I mean, you know, if you look at their profitability pouring in right now and the cash flow pouring in right now, the net income pouring in right now, you're going to look at this valuation and you're going to say, this is the most undervalued stock you've ever come across in your life, maybe in the stock market, right? However, the bad news is a ton of mortgage demand and refinancing demand has been pulled forward, and that is expected to slow down starting in this upcoming quarter and moving forward for the next 1 to 2 years. Not 1 to 2 quarters, for the next 1 to 2 years. And so we're in a situation here with Rocket where a lot of folks are looking at this stock and they're like, I don't want to be part of this stock. They got a bunch of bad news coming for the next 1 to 2 years. Why would I want to own this stock? Well, I'm actually looking at this stock as it falls more and more, and I'm getting more and more interested as far as me actually personally investing in it. I don't own any stock like this, okay? This would be, the closest thing to an investment in a stock like this is maybe like JP Morgan. And I mean, obviously the JP Morgan and this company have very different business models, right? But that's probably the closest thing. So it would add some interesting diversification to my portfolio. It would add a very, very profitable business model, a growing business, right? Obviously they're going to shrink revenue starting probably next quarter and moving forward for the next 1 to 2 years. But myself as a long-term investor of stocks, if this stock hits a 15 level, it hits a market cap of 30 billion or under, I know that this business model is an amazing business model for the long term. Maybe it's worth it for me to start investing in the stock, hold it for many, many years to go in the future. I don't care if there's a bunch of negative news that comes out over the next year. I could just look at that year as just a time for me to build my position bigger and bigger and bigger and then just hold for the long term. So yeah, I'm quite interested in this stock. If it hits 15s, I'm buying. Okay, it hit its 52-week low, by the way, literally today. If it hit 15s, I'm going to start buying this one. And if it goes lower and lower, I'll build the position bigger and bigger, even though I know they're going to have a lot of bad news coming over the next year. The business model is just going to be too profitable long-term for me to say, I'm not willing to hold it through a tough year, okay? So yeah, rocket companies, actually very, very intriguing stock, and it's down about 60%-ish from its all-time high that was reached literally just a few months ago, okay? Next stock up here of the bunch, number 3, this one's down 70%-ish. FUBO TV, however you want to call it, okay? FUBO, F-U-B-O. So this stock is in the streaming space, right? If you want to get, television service, but they really market themselves as a sports company. So if you're somebody that likes sports and you want to get a streaming service of some kind, they're almost branding themselves as kind of the main player in that. And I got to look, I watch sports and I looked at, the type of package they have, and it's pretty darn interesting. They got like all the sports channels you'd possibly want. I have YouTube TV. I like YouTube TV, but let me be very clear. YouTube TV doesn't have all the Fox Sports channels, okay? And if you're really, really into a lot of different sports, you want Fox Sports, and YouTube TV just doesn't offer that. So this company's at a really interesting place that they're branding themselves as sports first. So, which essentially means if you're thinking about going to a streaming service and you love sports, they're kind of, the way I'm seeing this is they're almost branding themselves at, if you love sports, come to our service before you go to anybody else's, because everybody else is not going to have the type of stuff we have and all the channels we have, okay? And so I think from that standpoint, I think it's brilliant as far as their marketing. Now, their subscription revenue is going up like triple digits right now, okay? Their advertising revenue is going up like triple digits right now, okay? And then they kind of have a secret business they're working on in the background, which is around sports betting, okay? Yeah. Okay, that's a little secret business they have going right now. That's a big wild card there. Okay, man. I mean, there could be a lot of money. I mean, if they're known as the sports streaming service that you got to have, and then they have that SB on top of it, you know, this could be really, really intriguing. Okay, so I look at this stock here. It's down 70%-ish from its highs, and I say, my gosh, this might be a stock I might pick up today. Let's just put it that way, okay? And might be a position I build more and more if it continues to go down, because they have, you know, 3 very, very exciting business lines, and I really like the way this company's branding themselves. And at a market cap of under $3 billion, you know, streaming companies are already going to be worth tens of billions of dollars in the future, right? So, yeah, pretty darn intriguing, and they are in massive growth phase. But let's be clear, the market doesn't want anything growth phase right now. Companies losing money right now. The market doesn't want any money-losing companies right now, right? So, very, very intriguing stock there. Number 4 of these 10 stocks that are down 50% plus. This one's down about 75%-ish from its highs reached a few months ago. Atomera, ATOM. So, they have this, essentially, it's a very, very thin film that can go on semiconductors. They have a customer that just entered phase 4 this year, and it's an interesting company. So it's a very, very speculative company. Very, very speculative. One of the most speculative companies I've seen, okay? Pretty small market cap relative, right? $300 million-ish market cap. But it's very, very speculative because they're basically kind of like a pre-revenue company right now, okay? However, this film that is supposed to go on semiconductors is actually quite interesting and could potentially be a game changer and something that a lot of semiconductor companies end up using, and they would make royalties off that. And so it's I would call it a high risk, high reward stock. It obviously comes with its risk because it's basically pre-revenue, but I will say that the royalties cash flows this company can bring in, if they, you know, successfully get these customers into phase 4 and phase 5 and get them producing, I mean, it could be pretty big numbers long term, okay? So the high risk, high reward stock, one I could potentially build a position in. I mean, look at this stock. It reached a high of $47. It's trading in the 13s today, okay? But yeah, like I said, very, very high risk, very, very high reward. This stock could fall another 50% from here, right? This stock could fall to $6, $7. You know, obviously its 52-week low was $5.91. So it could easily do that. But I am looking, and I'm seeing that customer in phase 4, and I'm seeing a lot of customers in phase 3 right now. And so it has me intrigued. It might be potentially a long-term play where I just wait it out and, you know, hope that their technology is a game changer, because it does seem very, very intriguing there with that one. That was number 4. Let's get into number 5 now, which is a very good food company, VRYYF. Haven't talked about this one in a long time. It's down 60%-ish from its highs it hit, you know, several months ago, okay, of $7.43 at its highs. You know, very good food company. They are growing very, very nicely right now. I mean, we're talking triple digits growth. They're expanding their business this year, going to start to expand their business massively in United States, okay, and get to be more than just a Canadian company. They're expected to probably have some big distribution deals and a lot of big retailers this year, right? Got a big factory in California opening up. And so I own, personally, I own over 40,000 shares of this stock. It is a speculative position of mine. It's I would call it a high-risk, high-reward play. Plant-based food company, okay? And the way I look at this is, if they grow their business successfully, there's no doubt in my mind that this could be a billion-dollar-plus company, if not, dare I say, a multi-billion-dollar company. Obviously, they got a lot of work to do, but it's a triple-digit grower. From what I've seen so far, the company's been growing very, very nicely. They've been executing very, very well. And I'm seeing the company get more and more professional as far as everything they do with their marketing, with leadership positions, everything like that. So I'm looking at this company, and I won't go out there and say this could be a food giant. Tattooed Chef, TTCF, I feel like that company's a food giant in the making. Very good food company. If it ever became a food giant, I would be taken back by that. I would be like, this is amazing. Like, this was way better than I ever expected. I think you know, a very good food company can at least be a long-term niche player in the market in plant-based foods. and maybe grow this into $1 billion company or a couple $1 billion company over time. Tattooed Chef, that's a little different. I look at that company, I say that can be a $10 billion plus company, which if you're talking about in the food industry, you're 10 billion plus, you're basically in a place where you're a food giant. You know, so this one, maybe they can become that over time, and then that's just, you know, I would be, you know, super surprised if they ever became a food giant, but you never really know how these things can work out over time. But based upon the execution, the growth, everything I've seen from this company, I'm really darn excited. And so, yeah, very good food company, all right? Halftime. So some folks might say, why is Tattooed Chef not on this list? Why is Corsair Gaming not on this list? Well, neither one of those stocks is down 50% plus, okay? Both those stocks are down probably in the 35% to maybe 45% range or 40% range, somewhere around there from their highs. So, yeah, that's why you're not going to see those two stocks on this list. Those are the stocks I've been buying the heaviest, obviously, over the last couple of months as they've fallen. But, yeah, they're not down enough, so they couldn't make the list, guys. So that's why they're not on there. All right, let's get into the sixth stock of these 10 stocks that are down 50% plus. MicroStrategy. This one's getting real interesting, okay? MSTR. So it's down 60% plus. Here's the thing with MicroStrategy. So basically, they have an underlying business. That business has usually been worth $1 to $2 billion, okay? That underlying business. This company holds, man, I think it's around 92,000 Bitcoin, if I recall, okay? So basically, what that means is the company's Bitcoin position is essentially worth about as much as the market capitalization is right now, which means you're getting MicroStrategy's underlying business essentially for about free right now. About free, essentially, okay? Which puts the stock into some very interesting territory. There was a time the stock got very, very overvalued, let's be clear, and the valuation got pushed up way too much based upon where Bitcoin was trading at a given time. But what I will say about this company is if you're at all bullish on Bitcoin long term, it's a company hard not to be excited about, because when it comes to MicroStrategy, they own more Bitcoin than any public company out there, okay? You know, on their treasury, like almost 92,000 Bitcoin out of what, 21 million will ever be mined. So yeah, it's a hard stock not to be bullish on if you are at all bullish on Bitcoin long term. And like I said, you're getting the business for free essentially right now, the underlying business of this company, which is pretty darn intriguing. So yeah, MicroStrategy, very, very intriguing stock. So yeah, that's that one there, okay? Next up here, number 7, this one's down about 75%-ish, is Churchill Capital, CCIV. This is the one that's combining with Lucid Air, okay? Here's how I feel about this one when it comes to the stock, okay? I'm not ready to buy it yet, okay? There can probably be a moment when I'm interested in buying the stock. They're going to be a player in the high-end space of EVs. And maybe they can become the Mercedes of EVs over time, okay? I like the way they're branding themselves. I like the you know, everything they're doing kind of with the company so far. But this stock has a lot of bad news coming forward, okay? I remember as Tesla tried to ramp their business, man, so much bad news, right? And you got this problem and that problem. And then once you think you're done a problem, you got a new problem to deal with, right? And so I'm looking at this stock. I'm paying very close attention to it. I'm watching it as it falls. If it continues to fall, goes under 15, I'm going to probably pick up some shares this one. And if it falls more and more, I'll probably pick up some more shares, okay? It looks like, you know, they got the Saudis behind them. They got a lot of big investors behind them. I think it's a company that will be able to raise capital over time to get to where they need to get to. And especially if they can prove out they can deliver vehicles that folks are excited about. But yeah, I'm interested in the stock. It's down 75%-ish, but I got to wait on it. I'm not running out there to buy it today. It's too high risk for me to go buy that one today, okay? And it's not. It hasn't had that same opportunity Tesla had when I was buying Tesla. Tesla had a different sort of opportunity. Tesla, I looked at it and I'm like, this can be the #1 EV player in the world long term and produce potentially 10 million vehicles a year, if not more than that. CCIV, I don't see that. I'll be completely honest. This is one of those companies I could see as maybe being a vehicle producer that produces, I don't know, 500,000 cars a year, maybe in the high end space, and maybe they're very, very profitable because they're have nice margins because they're in the high end space. So yeah, I'm keeping an eye on this one, and we'll be, it's one I'm definitely very interested in. I think it's definitely at least a stock to watch. Next one up here, stock number 8 of the bunch. This one's down 60% plus, is Fastly. This one plays in the cloud space on the edge, okay? $4.7 billion market cap. Look at this one. $136.50 was its high. It reached just a few months ago. It's trading at $40 here today. $40, and that's on an update for the NASDAQ, okay? This one is definitely in jeopardy of hitting that 52-week low. Like literally, one big downward day for the NASDAQ, and this one's trading at its 52-week low pretty much. So interesting stock. I got to do more research on this one. I haven't done a ton of research. All I know is they play, on the edge when it comes to cloud. I know they have very nice growth. I know a lot of folks expect this company to be very profitable long term, but I have more work to do when it comes to Fastly. And yeah, interesting stock, not needless to say. I mean, nice growth, down 60% plus. Woo-wee! Okay, let's get into stock number 9 of these 10 stocks, down 50% plus, and that's Zoom Video, ZM. This one's down over 50%. So Zoom, man, okay, when it comes to Zoom, here's the thing. They are the name when it comes to business video conferencing. Now, this was obviously the play last year, right? What I will say about Zoom is they basically have the brand name for video conferencing for like a long time to go in the future, okay? It's theirs to lose, essentially, okay? Like if you have any sort of business, small, mid-sized, big business, and you're going to do a video conference, like you're going to do a Zoom link, more than likely. Like that's just the way it's done at the moment, okay? And everything else is like, is almost like foreign territory. So it's theirs to lose in terms of being that player in that space. And Zoom is at a spot right now where they've got to expand into more than just a video conferencing company. They got to become more than that. And I think that's what Wall Street's going to want to see from this company. They're going to want to see a story that is beyond just video conferencing for businesses. If they can do that, then I see the stock as being in a very, very healthy place over time. And it could be a stock I'm interested in. It could potentially be a very, very profitable business model, okay? Let's be quite clear. This is Cathie Wood and ARK Invest in their main fund there. If we go to CathieWoodStocks.com, which updates every single day, the position sizing ARK has, what they're buying, what they're selling. Zoom is our 6th biggest position. Their 6th biggest position out there, okay? And so obviously ARK and Cathie Wood and the co, they believe a lot in Zoom over time. And by the way, look at this. Palantir is now up to their 15th biggest position. That one continues to climb. Don't be surprised if Palantir goes top 10 or even top 5 longer term. But yeah, Zoom, they believe a lot in that one. $742 million position there with that one, okay? Last up here, the EV stocks, okay? The EV stocks, they're all down pretty much 50% to 85%. Everybody was piling in these stocks many months ago when this was the hot play and at the end of 2020. And I was looking at it, and you didn't see me buying any EV stocks. The only one I bought was the one back in like 2019, which was Tesla, right? And I haven't been interested in any of the other EV stocks because everybody was piling in those. Evaluations were getting pushed up to just ridiculous levels. However, I will say with a lot of these stocks being, almost every single one of these stocks being down 50% to 85% now, it's at a place that I'm interested in potentially looking in here and seeing if there's any other EV plays that have a risk-reward profile that is interesting to me. As of right now, CCIV is really that only one if it falls under 15. But other than that, I'm open to looking at some of these other ones, Lordstown Motors, Workhorse, maybe even Nikola, who knows, obviously they got Milton out of there now, and maybe some of the Chinese players there. And there's other players that are in relation to EVs as well. So yeah, that's one space that is messed up right now, okay, EV stocks. So hope you guys enjoyed this video. As always, if you're looking to join us in Stock Hub, that's our free Discord chat. Check out first pin comment down there. If you want to join my private stock group, you want to take your investing to the next level, you want to join us in the private Discord chat, check out second pin comment down there. And let me know if there's any of these stocks you guys own or are buying out there. Much love as always, guys. Don't forget to smash for us. That helps out huge in the YouTube algorithm. I appreciate you guys. And peace.